Hey everyone, Chewy reported quarterly earnings results that are sending the stock higher. It's up as much as 29% as of this recording, following the excellent quarterly financial results. Of course, I've rated Chewy stock as a buy all year long, and actually I've rated Chewy as one of my top stocks to buy all year long, and I recently updated that recommendation, reminding investors that Chewy was an excellent business selling at a very cheap valuation. So in this video, I'll review Chewy's quarterly financial results, and I'll update my recommendation for Chewy stock. I'll answer if it's time to take profits now that it's up by 30%, or if Chewy stock is still a top stock to own even at current valuations following the increase. So let's start with the latest results.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Chewy reported net sales of 2.88 billion, which was an increase of 3.1% year over year. That was much better than management had forecasted. Management told investors to expect sales growth of roughly 2% year over year in the upcoming quarter, so the company delivering 50% better growth than it forecasted. That's one of the reasons the stock is up, as well as others I will highlight next. The gross profit margin increased to 29.7%. That was up by 130 basis points year over year. Earnings per share almost tripled to 15 cents per share, up from 5 cents a share in the same quarter the prior year. So both sales and profits increasing for Chewy. Now, coming into the quarter, management had told investors that 2024 was going to be a challenging year for revenue growth for Chewy. One of the reasons it said that is because of the significant growth the company experienced during the earlier stages of the pandemic, when people were spending more time at home, when people were forced to socially distance themselves, they adopted more pets, and they spent more money on their pets online. That was right in Chewy's wheelhouse, and the company benefited tremendously. So now, heading into 2024, they're comparing against those time periods when they accumulated all of those customers, and now they're not accumulating as many customers as they did earlier in 2020 and 2021 and in parts of 2022. So the new customer growth is not keeping up with the regular customer churn, and that's causing a decline in customers. And so that's causing some trouble in terms of decelerating revenue growth for Chewy. And that's why Chewy's stock price had been decreasing by so much, right? I suggested Chewy as a top stock to buy because the valuation was so attractive following those dim outlooks for 2024. Now, another reason the stock price increased following this announcement is because the company is going to use $500 million to buy back its own stock. The board of directors authorized a share repurchase program of up to $500 million of its Class A or B common stock. That doesn't mean they will for sure buy back $500 million worth of their stock, but it means that they are authorized to do that. Typically, when companies make an authorization of this type, they usually spend the money and actually buy back their shares. And I often say when a management team or when a company is buying back its shares, it's a strong signal that they believe their shares are undervalued. This is especially true, like in Chewy's case, when the valuation is very cheap, like I've been talking about for several months now. And I agree with management here. I think their shares are undervalued, and I like the share buyback program, as do many investors, as evidenced by the increase in stock price. Now, another reason the stock price is up is because of an upgrade to their 2024 profit forecast. I want you to pay attention here to the adjusted EBITDA margin for fiscal year 2024. The company just updated it, increasing it to 4.1 to 4.3%. The previous outlook had the adjusted EBITDA margin for 2024 coming in at 3.8%. So they upgraded the profit aspect from 3.8 up to 4.2 at the midpoint, so a 40 basis point increase in the profit margin expected for 2024, while the net sales growth for fiscal year 2024 remains the same. They did not upgrade the sales forecast for 2024 just yet, but I wouldn't be surprised if they do indeed upgrade it next quarter, because the first quarter revenue growth was ahead of expectations. They delivered 3% instead of 2%. So if the second quarter comes in ahead of expectations again, I wouldn't be surprised if they increase their 2024 outlook. I wouldn't be expecting a huge increase. Instead of 4 to 6%. Maybe they increase that to 5 to 6% or 5 to 7%. It won't be a huge increase, but it looks like so far in 2024, the year is progressing better than management had expected going into the year, given those outlooks I showed you previously. One of the things I've liked about Chewy's business over the years is that existing customers spend more and more and more with Chewy as they mature with Chewy. So if you join Chewy in 2022, typically that customer will spend more in 2023 than they did in 2022, and then more again in 2024 than they did in 2023. As customers get acclimated with Chewy's business, they find more ways to spend more money and allocate more of their pet spending on Chewy's platform. That's a good sign. That signals that Chewy is finding its niche market with pet parents and keeping them and engaging them more so as they mature. So that shows that they're providing good value to pet parents. Otherwise, why would they spend more money with Chewy year over year? Right? If they didn't like what they were getting with Chewy, or if they found better prices or better value somewhere else, they would spend less at Chewy and spend more somewhere else. But they haven't been doing that. Chewy's net sales per active customer has been increasing solidly over the years, and that's primarily due to increasing spending from existing customers. And then on the bottom here, you'll notice that trend that I talked about that first caused Chewy's stock to be selling at a cheap valuation to begin with, and that's the decrease in active customers. You'll notice in Q1 2024, they have 20 million active customers. That's down from 20.4 million in Q1 2023, and they actually had 20.7 million active customers in fiscal year 2021. That's when the initial surge from the pandemic stay-at-home trends benefited Chewy stock significantly. So you'll see Chewy stock, as of this recording, it's up 29.33%, following these much better than expected results out of the company's quarterly financial update. Now, you'll notice 2% growth and 4% profit margin. These are not incredible numbers, but the reason the stock price is up by so much is because it had fallen because of these slowing growth numbers, right? Chewy for several years was growing revenue by double digits. And so when it forecast a 4 to 6% revenue growth rate for 2024, that caused the stock price to fall. And now this is the recovery from that decrease. Typically, a 3% revenue growth would not cause a company's stock price to jump by 29%. But the valuation was so cheap coming into the earnings report. That's what I talked about. If you watched my video, I made a preview video on Chewy's upcoming earnings release, and I answered the question. I said, should you buy Chewy stock before it announces earnings? And I said, yes, you should buy Chewy stock before it announces earnings, because the valuation was so cheap that it didn't need to do very much to cause an increase in the stock price. And you're seeing that here with the 29% increase. So if you watched that video and you took my recommendation, you will have made some money on Chewy stock here. And overall, I had rated Chewy stock as a top 10 growth stock and a top 25 stock to buy all year long. I last updated that recommendation on May 12th and reminded investors that I still thought Chewy was a top 10 growth stock and top 25 stock to buy. I'll update that again, and I'm keeping it rated up here as a top 10 growth stock and a top 25 stock because the stock price increase was justified by better fundamental results. The company delivered better revenue than expected. Earnings per share tripled from the same quarter the prior year, and the company upgraded the profit margin expectations for 2024, all better than what I was expecting coming into the year. So I'll update my recommendation and reiterate my feeling that Chewy is an excellent stock to own. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.